Not all dividend strategies are created equal. Whether you're an ultra conservative or a yield chasing cowboy, there's a strategy for you. In this video, I'll walk you through 5 levels of dividend investing from safe to steady to high risk, high reward. So the first one is going to be TLT, the iShares 20 plus year Treasury bond ETF. This is perfect for people who are retired or don't want any risk. So this ETF is going to have a dividend yield of about 4.3%, and you're getting paid monthly. And this ETF basically holds long dated 20 plus year treasury bonds. So you're going to have interest rates directly tied to the performance of this fund. Right now, it's a perfect time to buy TLT ETF because interest rates are sky high. So this means that once interest rates do fall, this stock may come back to levels above $100 per share. So you're going to see some nice capital appreciation, and I don't think this ETF is going to fall much further, because when interest rates rise, that's when this ETF falls, and when interest rates drop, that's when this ETF rises. And if you truly do not want any risk, you're going to look at SCHD, the iShares 0 to 3 month Treasury bond ETF. Treasury ETFs are going to be your safest bet. And the 0 to 3 month Treasury bond ETF, you're not really going to lose money because this ETF is always going to stay above $100 per share. And you're getting paid dividends monthly as before, 4.71% yield currently. And this is usually better than a high yield savings account because you're getting a much higher dividend yield. Currently, the high yield savings account such as Capital One is going to be about 3.6%. So as we can see, 4.71%, you're getting almost a whole percentage point more in interest. Level 2 is going to be your blue chip dividend ETFs. Now the popular one is going to be SCHD, which has had a total return of 209%. And this isn't including any of the dividends. The dividend yield is going to be 4% and it's paid out quarterly, but inside you're going to have high quality dividend paying stocks such as Coca-Cola, Verizon, Lockheed Martin. So unlike the Treasury ETFs, you're going to have not only the dividend yield of 3 to 4%, but you're also getting capital appreciation. In the past 5 years, the stock has appreciated 56%. Another ETF in this category is going to be the iShares Core Dividend Growth ETF, DGRO. We currently have a dividend yield of 2%, so it's a bit lower than SCHD, but if we take a look at the chart, the 5-year is up 71%. So in this category, we're really looking for long-term conservative dividend investors who are also looking for that dividend growth potential. And inside this ETF, we're going to have companies such as Microsoft, JP Morgan, ExxonMobil, and even Apple. So this ETF focuses a little bit more on share appreciation and growth versus dividends compared to SCHD. Now, level 3, we get into the income optimized ETFs. These are going to be your covered call ETFs such as JEPI, which is the most popular income ETF by JP Morgan. So if we take a look at the chart, it's only up 11% in all time since 2020. But that is going to make up for the 8% dividend yield, and you're also going to get payout frequency of monthly dividends. So an 8% yield is really solid, and it's employing a covered call strategy on many stocks that are found in the S&P 500. Now, if you want to employ the same covered call strategy on the NASDAQ 100, JEPQ is going to be your best bet. As we can see, the share price appreciation is only up 2% in the past 2 years or so, but we're going to be having a higher dividend yield of 11%, and you're getting paid out monthly. And this is because stocks in the NASDAQ are mainly focused in the tech sector, and you're going to see a ton of volatile tech stocks such as Microsoft, Apple, NVIDIA, and Amazon. Now we move on to XDTE, which is the Round Hill S&P 500 0 days to expiry covered call strategy ETF. This is very similar to covered call ETFs such as JEPI and JEPQ, but this is going to have a much higher dividend yield. As we can see, it's going to have a 32% dividend yield paid out weekly. This is a great appeal to a lot of investors because you're getting paid out so frequently and you're able to reinvest or use those dividends for bills. But as we can see, it's going to be volatile and it does drop heavily with the market. It went from around $53 per share all the way down to almost $40 per share from the recent market crash. Another ETF is going to be the YieldMax Universe Fund of Option Income ETFs, MAX, and this is going to have a dividend yield of 64%, and it's going to be paying out weekly. As we can see in the holdings, it's going to consist of all of their YieldMax option strategies, so you're going to have a diversified portfolio. And that's why this is level 4. It's going to have a lot of diversification from these ETFs, so you're not invested in just one single stock ticker. Moving on to high risk, high reward, we're going to have, of course, MSTY, the YieldMax MSTR Option Strategy Income ETF. And if you take a look at the chart, it's going to be incredibly volatile. This stock has gone from $20 per share back to $43 per share, all the way down to $19, back up to $40, and then $19 again. So this is a very volatile ETF because it's an option strategy on a single stock ticker, which is MicroStrategy. But in return, we're going to be having an insane dividend yield, currently about 123%, and this is distributed every single month. So a lot of people are able to get back their initial investment that they put into MSTY within the first year of investing in MSTY. Now the next ETF is going to be YieldMax NVDY Option Income Strategy ETF, NVDY. Similar to MSTY, this is going to have over 100% dividend yield, and it's going to be paid out monthly, and it's going to have the same covered call strategy as MSTY. It's going to sell call options against a long dated call option, which is known as the poor man's covered call. But NVDY has been volatile as well, and it's currently down 25% all time, so it is going to be very risky. And that is why these two ETFs are at level 5. So that's it for this video. Which level do you want to invest in? We have from insanely conservative income investments such as Treasury ETFs all the way up to insanely risky YieldMax single stock ticker ETFs. These are all income ETFs. It just depends on what your investment strategy is and if you want to take on from little to no risk all the way to high risk, high reward.